Felix a good thing.
Alright, ladies and gentlemen, welcome back to another installment of Chart Talk. We got things working a little differently this week. I'm trying to set up this new office in Brooklyn. I can't get my audio, my video to work. It's making me go crazy. But I tell you, I gave Bennett the week off after we tried this for like 12 times in 12 days. He's out at the beach. I said, you know what, take the week. I got us. Team on my back. So let's get right into it. All right. So very simply, we're seeing this grind up market. Very, very lackluster trading out of the indices. We just continue to grind higher. It's not as easy as it looks. The leadership is not very broad. We're seeing money rotate in between different sectors pretty often, and we're really only seeing the strongest stocks within those sectors really take this market higher. Even today, we're up 0.12%, but there's a lot of weakness out there. We head over to the Qs, and we got some information out of the Qs today. So very, very weak day out of the Qs. All right, we take a look over the heat map, and we can just see how weak tech truly was today. And then we look over at consumer defensive. It's all these, all these value stocks, all cyclical names, things like that. And it has a lot to do with this infrastructure bill. So we got a huge $1 trillion package that was finally passed today. This has been in the works for months. And where's all this money going? If we look at this, a bill includes $110 billion funding for roads, bridges, major projects. And there's all these things in the deal that we have to look into. But what we care about is, does the market care? And the market screamed at us today that it clearly cares. Look at the industrials. You look at the railroads down here, very green. Anything travel related was very green. So, you definitely have to take that information into account with how the market's looking. But otherwise, in a broad sense, we're grinding higher. This is a swing trading market. When I say it's a swing trading market, this is the time where you just let your stocks work for you and you get bailed out by the strong market. Now, a day trading market is one in high volatility. That's where you really got to pick your spots. You got to be in and out of names. This is not that market. And I'll go over my good and bad trades later about, where I was really making mistakes, where I didn't really recognize that as quickly as I should have. And I haven't been doing as well as I should have this month with what's going on. So let's get right into it. As I said, grind up market. Indices, continuously move higher, but it's not as easy as it may appear. So let me just get into these good trade, bad trades real quick. So start off with probably the worst trade I've had maybe this year was this Twitter. So my thinking in this Twitter, huge base, and they make all their money pretty much in advertising. Now, what have we seen out of the advertising names? Advertising came back. I have Google typed up right now. They crushed their advertising numbers because we're seeing advertisement come back in a big way after COVID, and the same with Snapchat. They had a tough day today, but look at where they're at. They're trading, a couple bucks off all-time highs. Their recent earnings took them to all-time highs at the time, so they're just flagging out. They're grinding, but they look really good on a long-term sense. So then this Twitter, I'll tell you when I tried to get in. Let's see. So I bought initially. I bought a feeler this day right here, knowing. All right, let's say we look at the chart from here. This is earnings day right here. They gap up to the resistance level and just kind of fade. Then it bounces off that off this support level, and then it gives us 2 inside days. So looking at this chart, what I wanted to happen was, I buy a feeler this day, I get another inside day, and then ideally it rips through that 72, and I can load up on really cheap stock. By cheap stock, I mean with very tight risk. I get huge size with tight risk. Mistake in this market. So what happens? So Twitter begins to pull back, it pivots, and I get out of a lot of stock on this day. It looks like nothing's happening because I'm doing too much with this name. So it pulls back this day, I take a loss. So then the following day, let me zoom in a bit here. The following day, we can see it opens, right around the 69.50, and it takes out the previous high. So I'm looking at it like this, saying, okay, maybe it just needed that pullback, and then it begins to go early in the day, and I load up once again. I just took a loss of this name yesterday, and now I put a max risk trade opportunity on again with another tight stop. Mistake. So I get in, I get out that same day, and then it finally pivots off this 68 support. I should have been trading against this 67, 68 support the entire time. Instead, I was trying to cheat the stop. That's what killed me. So then I had to go again. I bought a little feeler here, and then what is this? Is this yesterday, last week? Whatever it was. I get stopped out again. And really, I'm looking at this chart now like, what the hell am I doing? I'm just buying this thing on the way down every single day, just making mistakes. I'm getting way too obsessed with the chart and what I think the breakout should look like, that I'm losing sight of the price action. That was my major mistake in that trade. So, I lost a good chunk on that one, and more importantly, I lost so much time watching the name when I could have had that time and energy and capital invested in other names that are moving well, and they're showing me they're moving well. So that was a major mistake for me. How this month is going so far. We look at some of the better names. I got into this XPO today. Logistics. Remember, we saw the infrastructure company strong today. This is transportation and trucking. That's going to be, I believe that'll be hot for the next few months. I'll get a few over real quick. NSC, bought this one today. This one looks really nice. Transportation, railroads, again, infrastructure bill. Giving us some nice consolidation at support right on the 200 day. So very simply, this trade's brand new. I bought this 257 area just against these 250, 275 lows. And I'm not loading up on these. These are, swing trades, long-term account, things like that. Another one, URI, United Rentals, more of an infrastructure name. I bought this one small yesterday, and then I added a little bit today. Still not super huge in it, but I'm buying in this area, and I'm just giving it down to these lows at 323. So I believe this one's just getting started. And this is what I'm talking about with a grind-up market. I want to be in the best and strongest names, taking out highs, and just get bailed out by the strong market every day. I don't want to have to be clicking buttons like crazy, because that's when the mistakes happen, like I was saying with that Twitter. All right, where are we going from here? AMD. This is probably... This kills me. So I had an amazing entry in this AMD. And what we saw last earnings season, we had a really poor earnings season last season, meaning companies weren't getting rewarded for great earnings. So if you guys remember when these AMD earnings came out, I was going nuts. I was like, this is such a great earnings report. It's unbelievable that a company of this magnitude is still able to grow their revenue this much. So here's the earnings day right here. And I bought it. I bought it heavy at 91.25 versus what were these lows? 89.65. So about $1.60 risk. And and I started kicking it when I was $3 in the money, things like that, because I was looking at it as a day trade. Because last season we didn't see the follow through on these names, and this was one of the earlier names to report, I didn't really trust the earnings yet. So I was almost all out of stock on this day one at 97.50, 98. And I'm like, wow, $6-7 on $1.50, $1.60 risk day one. That's a great trade. But I hold on to this trade, and this thing makes my whole quarter. That's a big mistake. That's a big mistake. So I still have some stock, but nothing like I should have had for the run up. So I look at what I did make and what I could have made, and there's a huge discrepancy there. And as traders, we cannot let these opportunities pass us by. This is a once in a quarter trade, this AMD, and I had it mapped out. I had the right entry. I love the earnings. There's nothing telling me to sell the stock except my thoughts based on last quarter. But I should have held on to a bigger chunk of my position. Learned a tough lesson there. LAD, this one, let's talk about a good loss. This is a good loss here. I made this name trade of the week right here. So it gaps up to the resistance level on earnings. Didn't buy it. And then it pivots off here, off these new support turned resistance. Resistance turned new support here. And I bought, this 376 versus 364. And, I had it, if it wanted to break out, it just wasn't ready yet. But I got out here below these lows. And listen, that's a good loss, right? I put myself in a position to make money. It was in a good name. I still think this one can go. I think it needs more time to flag out. Oh man, this one hurts. So again, recent IPOs, and this one I'm not too mad at. I'm much more mad at AMD than something like this curve right here, because these recent IPOs are such crapshoots. It's such price discovery, and it's just pure supply and demand. That's why I love trading them, because they're known to make these sick moves. But we had alert right here. I bought it. I bought what? 23.75 versus 20. versus 23. So 75 cents risk. I make $4 in the trade. That's 5 to 1 right there. So, or $3.50 in the trade. But look at it now. 23. It's trading at 29. That's $6 in the trade. So I sold the chunk day one. And then when I made this move, I was virtually all out of stock here by 26. And I just didn't hold on. I didn't really have the biggest faith in these names. Again, this was when I was focusing on Twitter and all these other names, instead of the name that was paying me. Big mistake. And I'll trade. All right, so this TXT, this one's going very well. This was a trade of the week right here. I bought it this day, but it was a swing trade. I didn't oversize myself. I gave it the proper amount of risk down to the support level. Even though I bought it on a breakout day that failed, it comes down, retests support this next day, and now we're just grinding higher. And I have some good stock in my hands. That's a good trade. That's how I should have traded most of these things. And then in Verve, another recent IPO, I bought this 55 area, 56 area. I felt I didn't have the best price, so I couldn't really load up. I was much smaller in this trade, and I sold it into strength into this 64. Thinking, again, I want to focus on other names and really put size into it. But again, this one's just flagging out at highs. I should still have my position right here. Mistake. What else we got here? This DOCN. This is the first trade I feel like I've had in weeks where I've loaded up on stock on tight risk and it's actually going well. So I bought this 54 today. Super high growth name. I think this name could be trading at highs very, very soon. So, I just simply bought 54, stop at lows, 52.50. And, this one's going well. It's only day one. We'll see how this one ends up. What else we got here? Oh, and then Tesla. Shouts out to Abby. This wasn't even really on my radar, this Tesla, and I did not realize that this was just an earnings flag. I saw this Tesla trading at support. Abby called it out. She called it out. See this little doji day? So, God, look at this entry we had. And I was only giving this to lows. So I bought 655 versus 648. So what's that? $7 risk. And I'm still up in the position. And I'm still up 50, $60 in the name. I did sell a chunk into this 2-day move. I sold a lot into the 720, so I don't have much left. But again, this one, it looks great. Doing everything we want to see it do. Again, shouts out to Abby on the call out. That was not on my radar. That was not my trade. And then CSX we got into today. Another infrastructure name, railroad name, very tight consolidation. And now I was giving this one more room. I bought this, $32.50, and I was giving this one down to that 31.70 area. So I have high aspirations to this one. I think this one can lead us higher soon. But, as you can see, the mistakes I'm making were all user error mistakes for the most part. I was in all pretty great names. It's either I got out of winners too quickly or I put too much time into losers where I was in my head about what should happen versus what I was actually see happen. So those pretty simply, you could sum up all my mistakes from that statement this past month. So where we go now? Good trade, bad trade, give you some market outlook. All right, now what are we looking at here? All right, so we got a bunch of names setting up. Here's the CPRI. We saw a bunch of retail names break out today. I didn't do. Oh, eBay looks good. Let's see the XRT. So retail. We look at retail stocks, and you saw the lift off they got today. As we're going to more of those cyclical names. So CPRI fits that mold. I would like to see it flag out. Maybe 2-3 weeks in this area before we try to buy this 60, 61 area. But again, names gapping to highs on earnings, flagging out. That's where you want to be in this market. That's where you want to be in any market. This is my favorite trading setup. I mean, obviously, I would like it to be much tighter, and I'd like all these moving averages to catch up. But earnings names that are flagging at highs, that's where you should direct all of your energy. What else we like here? This WSM, Williams-Sonoma. This one just continuously holds the support area. The only problem is they have earnings coming up August 25th. It's only August 10th, so we got 2 weeks until that. Still time to make its move, but with so many earnings names out there, do you want to direct your energy into something that hasn't reported yet? But again, retail name, holding support very, very well, coming out of tight consolidation. That's good stuff right there. Hog trades from Harley Davidson. This looks good down here. rounding out the support area, we're looking at 41 right here for the entry. Looks pretty good here. And now, THRM. This one, I'm not sure if it's quite ready yet. It made a huge 13% move on earnings day, and it's only been about a week and a half since then. So I don't want to buy this just yet. I do want to see it flag out a bit more, but the more I look around this market, like for example, this Crocs, this wasn't very ready in my eyes. The only time you could say it was ready when it held this 8-day simple moving average, but now it's leading the market higher. So, what was that, a THRM? So, I'm not sure if it's ready yet. I just know it definitely looks good through that 84, 85 in time. I would love more consolidation, but as we're seeing, the best ones aren't waiting around. Where we go? Echo, transportation company. So we see a gap up here on earnings. And now this is virtually an earnings flag right here. The problem is, if you buy it, the proper out is down here at this 29 area. Proper out. But if I'm buying this name here, there's just no way I can give it all that room. Just knowing the name, I would need to sell it at like $50. Too much. But definitely on the radar. I like the pivot I put in today. It's showing us this 30 area is acting as new support. But I do want to see more out of it before I buy it. What else are we looking at? Skechers. So this is exactly like that Crocs I was just talking about. Skechers turning a previous all-time high resistance into new support on earnings. I would love for this thing to give us just 2 more weeks of sideways. Let these moving averages catch up. But again, I look back at Crocs, not giving anybody a chance to get it. So that one may be ready more soon than we think. Keep my eye on it regardless. LKQ, we see it holding up in the support area right here. We see it giving us this mini box right here. So this one I would buy tomorrow. This 51.50 against this 50 support. Very tight risk entry. Looks like it could, run through highs, be a market leader. And again, consumer durables name, infrastructure. All right, where are we going from here? FTV, another one. I'm not sure if this one's ready yet. Just look at this beautiful macro pattern it's putting in. Looks absolutely gorgeous. The 75 is such a nice spot. I'm just not sure if it's quite ready. If they gave us 2 weeks of sideways, I would feel very differently about the setup. But I don't think this one's quite ready yet, so we'll give this one more time. Comcast, CMCSA. This one's a grinder. You're not going to see any 10% moves out of this name, but I really like the macro pattern it's putting in. It looks like you could buy this 59 area down against this last pivot to 57. And again, these names will take a lot of time to work out. These aren't the names that are going to be ripping 5-10% a day, but that's kind of the nature of the beast when you're trading these names. And lastly, I'll give you guys this MXIM. It's a semiconductor stock. These were definitely not the strongest names today, but it made a really big recovery. This is earnings day right here. Huge recovery on earnings day. So then when it can finally take out this 102.50 area, I am very interested in this stock. So, that kind of wraps up what I'm looking at. You can see, the most important part of this video is taking out the mistakes I made, which were very clearly, being kind of closed-minded about the setups I was taking, where it's, that Twitter was just trash. It was trash. But that's really it. That's all I got for you guys. Shouts out to Higgins. Look at my new keyboard. It won't stop changing colors. I'm not sure if it's supposed to do that or not, but you know what? It works, and that's good enough for me. All right, wrapping it up. See you guys next week, or whenever the hell we get to this again, whenever I get this audio video situation worked out. But again, maybe like, subscribe, question in the comments. What do you want to do? All right, that's all you got. All right.